Good morning, everyone. Welcome to Canadian Mortgage Weekly Live for Thursday, October 27th at 11:30 a.m. And wow, what episode we have ready for you today. We're going to take a look at the Bank of Canada's announcement yesterday. Came out that they raised interest rates by 50 basis points. And we're going to just talk about that today, as well as the monetary policy, as well as some of the mortgage data to help you with your mortgage decision making today. Again, it's Joe Bladek here, joining you today from Canadian Mortgage Weekly, Canada's only video mortgage news weekly podcast, airing from 𝗟𝗡𝗓, Ontario. We are celebrating episode 105 today, 105 episodes in, bringing Canadians the mortgage news that actually can impact them and they understand. So again, my name is Joe Bladek. Looking forward to getting into this episode today. In the meantime, if you have any comments or questions about the rate announcement, or if you have any suggestions what we can air in the future to help you with your mortgage decisions, drop a comment below. I would love to hear about what your thoughts are and just about the rate decision as well. What you think the Bank of Canada is doing. Do you think they're doing the right thing by raising interest rates yourself and all that? Okay, so let's get on today to our episode here today. Again, my name is Joe Bladek, and I want to get into the rate announcement. The Bank of Canada did raise interest rates by 50 basis points, and we were expecting a 75 basis point increase. So that is quite a shock to a lot of news outlets out there. I'm seeing that news outlets have reported that they were expecting a 75 basis point increase. I know on my live episode yesterday, we were expecting a 75 basis point increase. So looking forward to hearing your perspective and thoughts. Do you think you were expecting a 75 basis point increase? I know that I certainly was. I'm very happy today as a variable mortgage rate holder to see that rates did not go up as they were expecting. So that's one of the market reactions we are seeing now, that interest rates have gone up, that they did not raise interest rates as much as they were expecting. So what else is happening as well? What else is the market reporting? Well, the market is reporting that the International Monetary Fund, the IMF, is actually encouraging countries to continue to raise interest rates going forward. So they're actually encouraging countries to continue raising rates, to continue bringing down inflation and curbing demand, because they believe that despite the crazy demand since the economy opening up, that we need to tighten up interest rates and keep raising interest rates all across the world. So that is an interesting thing. I know that our government closely follows the IMF. So they're saying, all countries should follow suit. I'm going to expect that Canada will follow suit as well. If you're interested in seeing what the rates are today, don't forget to check out my ticker below. A recent addition here to Canadian Mortgage Weekly Live, Canada's only weekly video mortgage review podcast, with prime rate and everything else just at your fingertips below there. Let me know what else you want to see on there as we continue on with this episode. So what else is being talked about today? Well, we are seeing that inflation concerns, because rates have been going up, is now causing concerns for renewals, upcoming mortgage renewals. If you have a mortgage renewal coming up in the next few months or the next 6-12 months, you're going to be faced with quite a lot of shock as you open up your renewal letter and you see that rates have gone up quite significantly. I know a lot of mortgage rate holders and home buyers took out mortgages and rates were 1.5%, 1.99, 2.99. I remember 2.99 was a massive, great rate. Even if you had a mortgage rate of 3.99, you're going to be receiving mortgage rate renewals at 5.99 or 4.99. And some mortgage rate renewals, if you are with an alternative lender, at 6.99 and 7.99, which will essentially raise your monthly payments by hundreds of dollars. So if you're in that position and you need to look at some changes, definitely reach out to me. I'm a mortgage broker. I work with all the lenders in Canada, and I can get you set up with some options, because there are options for you. You don't have to take that renewal. You can do a lot of changes to your mortgage to be able to combat those higher payments. Call me at the number below, or email me here, or call or text here. So let's talk about the monetary policy now that the Bank of Canada released with its interest rate announcement yesterday. I know that there's a lot of data in there, and I wanted to just go through it with you today because it is a hard read. The Bank of Canada did, in its monetary policy, state that inflation around the world remains high. And they're expecting that the inflation will come down as the economy slow and supply disruptions ease. And that's when they expect global inflation to come down. Canada is really focused on bringing inflation down. They do not want the inflation to compound every year. They do not want to see our coffee prices go higher every year, our food prices to go higher every year in such a fast amount, our service prices to go up every year in such a fast amount. However, there's just so much demand right now. Everyone has this demand since COVID lockdowns have ended to pay for services, and there's so much demand for services, and that's actually pushing inflation higher. So if everyone had less demand for services, we would actually see inflation where it's at. So interest rates rising are double-edged sword. As people need things done, inflation goes up because there's not enough supply, and because of that, interest rates are going up. I'm curious to see in your comments below why you think inflation has been going up. What are your thoughts about this? All right, what else is the Bank of Canada saying in its monetary policy report? Well, the bank's projecting that global growth is going to continue right now, but slow from 3% in 2022, which is not too bad, to about 1.5% in 2023. So half the global growth is projected next year, and then to pick up in 2024 with a 2.5% growth rate. It's a slower pace of growth than was projected by the bank's July monetary policy report, which is encouraging because if growth is slowing down quicker than we thought, that means inflation should subside quicker than we thought. However, let's continue going through some of the comments the Bank of Canada did make. In Canada, the economy is continuing to operate in excess demand, and labor markets in Canada are remaining tight. Strong demand has been leading to a sharp rise in the price of services. So, Bank of Canada did make mention that service prices have been going up, and that is contributing heavily to inflation numbers. So what are services? That's, say, services to get your home repaired, services to get your home renovated is one of them that I'm very familiar with in this industry. Services like mechanics to get your car repaired, services to, say, like taxis, services like transportation services, all those types of services that you're not actually getting a product for, but you're actually paying for a result, a service. Those prices have been going up tremendously, and that's contributing a lot to the inflation numbers we're seeing. So the Bank of Canada does want to lower those numbers, the speed in which these services are increasing in prices, and because of that, they're going to continue to raise interest rates. Strong demand has led to a sharp raise in prices of services. So that has all happened since COVID lockdowns have ended. However, we're also seeing that transportation now is taking a dive because FedEx just released its numbers saying that shipping is expected to go way down. So we'll see how this goes. I mean, we'll see how the holiday season, Christmas season turns out, and what will happen in January as services continue. And do we see excess demand, or do we see demand fall off a cliff? If demand does fall for these services, if everyone does take a peek back and pares back on their spending on services, we will see services come down in price, or at least stop rising in price so dramatically. Where's inflation sitting at now? So the Bank of Canada's seeing that inflation right now is at 6.9%. They did mention that a lot of the lowering of inflation has been due to gas prices, so that's fantastic. But inflation is still really high. 6.9% is quite a high value of inflation, and that we're expecting that the Bank of Canada wants to get inflation down to 3% by the end of 2023, and then return to the 2% target by the end of 2024. So where does that take us? That takes us about 2 years from now, the end of 2024, because we have 2023 and then we have 2024. And they also mentioned that the Bank of Canada is committed to restoring price stability for Canadians and will continue to take action as required to achieve the 2% inflation target. If I take anything from this report, that is saying that rates will continue to rise until the end of 2024, because that's when the Bank of Canada is expecting inflation to subside and come down to its 2% target. So what are your thoughts about that? Is it going to be just as aggressive as it has been in this year? Are we going to see quite aggressive numbers going into 2023, going into 2024? I mean, a 3% inflation target is pretty good compared to what we're at now of 6.9%. Also, they do mention that given inflation and inflation expectations, as well as ongoing demand pressures in the economy, the Governing Council expects that the policy interest rate will need to rise further. So there you go. The Bank of Canada has mentioned in this monetary policy report that they expect to raise interest rates further. So we have another rate announcement coming up in December. I'll just get into that very shortly here. However, that's where we're looking at. That's the monetary policy report. They do also mention that there's been excess supply issues due to the war of Russia and Ukraine. So with that involved, with everything, that's just putting additional pressure on the Canadian economy here. So interested to hear your thoughts below. What do you think is going to happen to our interest rates in 2023? What do you think is going to happen to our interest rates in 2024? Do you think a 3% inflation target will be enough for the Bank of Canada to stop raising interest rates? Or do you think that they will take it all the way down to 2%? We'll have to see. In the meantime, let's get into our presentation here. We have episode 105. Thank you for joining us continually here on Canadian Mortgage Weekly Live, Canada's only video mortgage weekly news podcast. 105 episodes in, we cover the Bank of Canada interest rate announcements as well as active mortgage news to help the Canadian homeowner just make better decisions on their mortgage and home purchases. So, moving on, we have the 5-year bond yield. A lot of my clients don't really know what the bond yield is, so let me talk a little bit about why I follow this metric. As you see here, the bond yield is at 3.48% as of October 26, 2022. It took a steep dive after the Bank of Canada released this interest rate announcement, which is a very interesting note. You know, went down about 20 basis points actually from the Bank of Canada interest rate announcement. Right away it went down. So the 5-year bond yield is the precursor to what's happening in 5-year interest rates. As you see, there was a spike earlier this year in the summer, and then it went down between midsummer, and then has been rising steadily since the fall. So we'll see what happens going forward. However, the bond yield is currently at 3.48%, and fixed rates are at all-time highs right now, between 4 and 5% for A-lending fixed rates. We'll follow the bond yield going forward on Canadian Mortgage Weekly Live. We'll see if it continues to dive into next week's episode. A 20 basis point drop in one day is quite significant. All right, inflation update. As you see, inflation has been declining since June of 2022. We did have a high of 8.1%, a quite significantly high inflation rate. Declined significantly from 8.1% to 7.6%, down to 7%, and currently sitting at 6.9%. So we have gone down a little bit there. Bank of Canada does attribute this to gasoline prices. However, prices are still rising, and they're still rising pretty quickly. So we'll have to see what happens going forward. I know that the Bank of Canada is concerned about inflation and is expecting inflation at 3% by the end of 2023 and 2% by the end of 2024, and wants to continue raising interest rates until it hits its 2% inflation target, which it's anticipating at the end of 2024. Okay, let's take a look at the United States inflation rate as we closely follow the United States. It has also been declining with a high of 9.1% in June, 8.5% in July, 8.3% in August, and 8.2% last month, September. Where do we see inflation headed? Well, it's been on a downward trend. Let's continue to watch this on Canadian Mortgage Weekly Live. As long as Canadian inflation and American inflation are both going down, that's good news for mortgage holders going forward. It's going to be good news for everyone holding mortgages as inflation hits its 2% target. CDOR rate. I follow this very closely to gain a perspective if a variable rate option is a good option for the Canadian mortgage holder and Canadian home buyer. Right now, the CDOR rate is at 4.52%. Actually, that's not correct. It's a little higher than that. As per the graph, we're getting closer to 5%. Variance to prime has also been decreasing, so I do apologize about those numbers. I did not update those. Those numbers are as of last week, October 19th. However, with CDOR rate increasing and the variance to prime decreasing continually, I always suggest right now that variable is not the only way to go, that you should really consider both fixed rate and variable rate options, and to give me a call if you want to discuss those options, because it's very important to discuss your options with regards to mortgages and what your plans are and what your home ownership goals are. So contact me to get started on that. You can reach me on the email just below here on the ticker, or call or text there on my number, 705-238-3479. All right, let's continue on here. The Bank of Canada rate announcement. Yesterday, we did have a rate announcement of, let's move this like this. Yesterday, we did have a rate announcement of an increase of 50 basis points, bringing Canada's overnight rate to 3.75%. That's a much less than expected rate increase, 0.50%. We were expecting a 0.75% increase, and now the next Bank of Canada rate announcement is December the 7th, 2022 at 10 a.m. Join me for a live pre-rate show as I go into some of the news leading up to that announcement. So looking forward to that. And in the meantime, let's talk about the national Canadian average house price. It has increased to $640,479 as of September 22. We've actually had 2 consecutive months of increasing national average house prices, which is quite interesting because we were expecting prices to continue to drop with interest rates going up. However, interest rates have been going up. I have seen investors purchasing houses at the bottom. And I've seen a lot of first-time home buyers and second-time buyers waiting because they were thinking the market's going to bottom out later. However, since August, we saw an August increase of 1.5% in the average national house price, and September an increase of 0.44% of national average house price. Very interesting to see that. And I'm interested to see going forward what is going to happen with the average national house price, because as this continues on, I'm expecting to see quite maybe a flatlining of the Canadian average national house price, because 1.5% August was a very small amount, 0.44% was even a smaller amount in September. Perhaps they won't rise or decline. Perhaps we're in that territory where we are bottoming out. As I said, first-time home buyers, second-time home buyers are sitting on the sidelines, but investors have been diving in right now. So why are investors diving in? Do investors know more than the first-time home buyer? Let me know in the comments below what you think. I would love to hear what your thoughts are on that. All right. So that's episode 105 here on Canadian Mortgage Weekly, Canada's only weekly video mortgage news podcast, hosted with your host, Joe Bladek. I'm a mortgage broker. We air out of '𝗟𝗏𝗄, Ontario, Canada. I service mortgages all across Ontario. If you're looking for a mortgage between Windsor and Ottawa, GTA to North Bay or Thunder Bay, we can help you get a mortgage. I meet with clients over Zoom, text, WhatsApp, Skype, whatever you need, and we can get you a mortgage today. As you see the rates below, if you're interested in getting a conversation done and a consultation done, please book an appointment with me. I have an appointment link in the episode description below, and we can get started today on your mortgage needs. Interested to hear what your thoughts are about the monetary policy report. Do you believe that inflation will come down more significantly than hitting 2% by the end of 2024? Or do you think we will see inflation numbers come down even quicker now that the Bank of Canada has taken such an aggressive stance on interest rates? Again, we have one more rate announcement left for 2022, December the 7th. Join me for that rate announcement with a pre-rate show. And thanks for watching episode 105 of Canadian Mortgage Weekly with your host, Joe Bladek. And as I said, we're Canada's only video mortgage weekly news podcast. And looking forward to next week's episode 106. If you have any ideas for next week's episode, drop them in the comment below or send me a private message. I love hearing what you guys want me to talk about. If not, then I'm sure that I will come up with something, because usually my clients, there's a growing or ongoing sentiment as to what the topics are for that week. All right. So thanks for watching, everyone. We'll see you next time here on Canadian Mortgage Weekly Live.